Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates of the stock markets, what's been happening in the first half of trading session today and what can you expect going forward from here. Joining us will also be an expert who will help us understand the current texture of the markets and where exactly should you be focusing on to put your money to get better returns in this kind of a volatile markets. Let's look at first the current movement as far as the benchmarks are concerned. 17,824. That's for the Nifty right here. There's a cut of about 0.4 odd percent in today's trading session. Look at the Sensex as well. It's now slipped below that 60,000 mark, 59,845, 260 points down there for the Sensex. It's seen a cut of about 0.4% odd as well. Look at the other mid-cap and the small-cap indices in the broader market space too. You are seeing some volatility right ahead. Both the indices are in fact down in trade, albeit slightly lower than the benchmarks. 0.3% of a cut for the mid-caps and about 1/10% lower for the small-cap 100 index. Look at the India VIX too. It's up by 1.5%, 15.6. Keep an eye out on that. This is the level that you need to watch out for. The advanced decline ratio clearly divided between the bulls and the bears at this point in time. Between the Nifty 50 stocks, you're seeing a 25 stocks in the green list and the 25 stocks in the red as well. So completely divided for that one. Which are the stocks that are up in trade today? It's stocks like L&T that are rising high, 1.4%. HCL Technologies right ahead of the Q3 numbers that will be announced in the evening. Ultratech Cement, SBI Life, JSW Steel. These are the stocks that are moving up in trade. Which are the stocks that are seeing dragging? Divis Laboratories again under the pressure of profit booking, 3.5% cut for that one. Axis Bank, BPCL, Reliance Industries also seen under pressure, 2480. That's the level at which it is hovering near. Hindalco also seen a cut of about 1.4% odd. In terms of the other sectors of the Nifty 50, you will be able to see that most of the sectors are in fact trading with losses, barring just the IT space and the realty pack. IT space is in focus because three big companies will be reporting their earnings. In fact, scientists come out with the earnings. HCL Technologies, Infosys, the two bellwethers will also be reporting their earnings today. Realty space seeing slight uptick after that loss yesterday. But rest all of the sectors, including the Nifty Bank, the private banks, PSU banks, financial services sector, you name it. Also, the auto space is still dragging, continuing its downward trend from yesterday. FMCG down by 0.5%, pharma stocks dragging by 0.7% odd. So there's an all across, largely a sentiment on the lower side that you can spot. Let's welcome our guest for the day. Abhishek Basu Malik joins in. He's the Chief Equity Advisor at Intel Sense Capital. Welcome, Mr. Basu Malik, and thank you so much for taking the time out for this discussion. And here's wishing you a very, very happy new year. First up, help us understand how are you looking at the markets and the texture currently. We are off to a very volatile start for 2023, but is that the way the entire year will also pan out and one should prepare for more volatile moves?
First of all, Happy New Year to you and all your viewers. And you're right. I mean, markets have been very volatile. We're just sort of moving in a range. And it's basically frustrating both the bulls and the bears. So whenever you think that, the bulls have an upper hand, markets are going down and vice versa. So that's what's been happening over the last probably 7-8 months. And I don't think that's going to change in the very near future. I mean, probably maybe the budget could be an event which would give direction to the market, but I mean that's more of a hope than anything else. But if I look at fundamentally, businesses in India are actually doing pretty well. uh, it's more of a concern from on the overall global context. I think that's where the problem lies. So we keep hearing about recessions in Europe, in US, and that's what is driving liquidity flows. And so that's where we are in the market. So very difficult phase for the market to be going through. But like everything, this also has a periodicity. After a while, this will also sort of be behind us.
Okay, but Mr. Basu Malik, like you pointed out, two big triggers that the markets are looking at currently. Of course, the earnings are underway, and then we will be looking at the union budget. First up on the earnings front, what is your broad expectation this time around? The IT sector is off to a muted start, if I could call it, because largely the TCS numbers were in line, but and because of the Q3 slowdown and seasonality factor that kicks in, there is still uncertainty as to how the future quarters will pan out, looking at how the macroeconomic concerns shape up in their major, client areas like US and Europe going forward from here. But overall speaking, what are your broad expectations from the IT space and from the other sectors as well? Any sectors that you are more positive on from the earnings aspect?
So earnings, I think it's very simple. In my opinion, export oriented sectors are going to be sort of muted. Domestic consumption focused, domestic infra, or anything which is related to Indian businesses, that is likely to do much better, right? And you will see that getting played out across all the sectors. In specifically in IT, I think in the next, I mean, forget about this quarter. We'll have to see even if the revival comes in the next quarter. My expectation is next 3 to 6 months is going to be reasonably challenging for IT until and unless there is, you know, maybe later half of this year, 2023, there might be a pickup in sentiment in US and in Europe, which is when it will sort of then start triggering off larger projects, approvals, etc. for the Indian IT services company. So, I don't personally see that things to be, really changing for the better for IT, at least for the next, 2 quarters.
Okay. Fitch has also come out with a report on the IT companies right there after the earnings and amid the earnings season. It says that the clients are going to be looking at preferring lower cost, and Indian IT companies, however, in the downturn, they do expect the Indian companies to grow faster than the global rivals in 2023 and 2024. So that's a little bit of positive from the Fitch report. The outlook as far as the Indian IT sector for Fitch is concerned, they have maintained a stable outlook for 2023. On TCS, they believe that the EBIT margin may have bottomed out. And also, they do believe that weak demand in FY24 will be offset by the lower expenses going forward from here. So this is as far as the Fitch report also has come out on the IT pack as well. But apart from this, let's also talk about, financials per se. Looking at how the FIIs have been still selling left, right and center, what could be the impact of on financials which actually finally picked up pace and the fag end of 2022 after those 2 years of underperformance? Now what happens in 2023?
So, see, the financial sector actually is looking quite good. Balance sheets have been repaired, NPAs are down, and getting better. So, I think if you look at broadly at financials and across the industry also, uh, larger companies have cleaned up their balance sheets. So, broadly, I think financials are going to do well. Within that, you'll have to pick your stocks in terms of which ones are more conservative. So personally, I always prefer betting on more conservative, slightly larger financial plays, simply because financial as a business is anyway an over leveraged business. So you don't want to get into companies which are extremely aggressive, because the chances of things going south is higher in those kinds of companies. If you are invested in a good company where there is uh, management is conservative, the chances are that the earnings growth, etc., will sort of over a period of time give you decent returns.
Right, absolutely. And from the budget, like you pointed out, that may provide some triggers to the market. Usually we do see this pre-budget rally taking place in some of the smaller pockets where mostly we do expect some announcements coming in or higher allocation from the government, more focused infra pack, the fertilizer pack, for example, railways, sugar. All of these sectors usually tend to pick up. We did see some movement in the December month of 2022, but any pocket that interests you ahead of the budget that investors can keep an eye out on?
See, we have to sort of appreciate that this is going to be pretty much the last budget for this particular 5-year period of the government,
Sure.
right? So, uh, the focus, in my opinion, is going to be more on one, social sector spending, and second is on infrastructure building. So, if we've seen the continuous policies that have come through for the last few years, I think it's not going to be uh, difficult to sort of forecast that railways, roads, water pipelines, etc. These are going to be the focus areas in addition to. Uh, I mean, these are pretty much the center stone of what policy has been over the last few years. So I don't expect that to change. Maybe the allocations etc. will be slightly here and there, but even with the current allocations, even the current focus, I think railways and basic infrastructure looks to be in very in a good path.
Okay, understood that. Let's focus a bit on specific stocks now, Mr. Basu Malik. You know, all those stocks that are in focus in today's trading session. First up, let's start off with the Nykaa. The stock has slipped a bit, and that's on the large trade deal buzz that's been there. The stock is down about 1.5% odd in today's trading session, and some big block deals that have been witnessed as per the exchange website right there. Undisclosed player at 148.9 rupees per piece has perhaps raised about $26 million via block deal today. The way we have seen movement on Nykaa over the last 1 year, what does it really hint at how 2023 will pan out? We've not seen any measure by the management really push up the stock considerably or give any sense of comfort factor to the investors, both potential and the existing shareholders as well. What are your thoughts on this stock?
So I mean, specifically about Nykaa, I think it's a good business, definitely. The problem initially and probably still remains is the valuations, right? And initially, when the company came with an IPO, the markets were slightly different. Now, what we've seen is with pretty much the liquidity flow going out with increased interest rates, things like that happening across the world. Uh, Funding is not that easily going to be available. Plus, you have the pressures of a public market where profitability, your price to earnings ratio, etc., is more, closely scrutinized by the market. So it's not going to be that easy for a company like Nykaa to be able to get back, into uh, a lot of positive territory over this year. I'm now speaking purely in terms of the stock price. So what definitely is required is over a period, the company needs to continue to perform well, grow at least 25-30% consistently, and you also have to give the you know stock some time to consolidate. Honestly speaking, this is not a stock that I would be very interested to buy at this point in time.
Okay, understood that. Let's also focus on the auto space because, the Auto Expo is underway. And after an action-packed day one of India's biggest motor show, Maruti Suzuki finally unveiled the much-awaited Jimny in India with bookings opening from today, a day after they also unveiled the concept electric vehicle as well, the EVX. And in fact, my colleague Chetan Bhutani caught up with Shashank Srivastav, Senior ED of Maruti Suzuki, on the sidelines of the event. And here's an excerpt from that conversation.
I believe while there is consensus in the industry that EVs will become mainstream, but there is since it's still an evolving area, there is no consensus as to when that will be happening. So the current projections by various research analysts, etc., is that it should be in the passenger vehicle segment about 17 in India, 17 to 20% of the market should be EV, which means that if you do a simple calculation from today till 2030, 44 million vehicles will be sold in the country, passenger vehicles, out of which about 3.5-4 million will be EVs. So what do you do about the balance 41 million vehicles? You need to do something to reduce emissions from those. And that is the reason why Maruti Suzuki has believed that we really have to be technology agnostic in that, and we will have to, we will necessarily have a mix of options in terms of technology. For example, we have CNG vehicles. It's a very large part of our portfolio. It's a very clean fuel, very low emissions. 20% of the vehicles sold today from Maruti Suzuki are CNG. Then we have biogas. Then you have flex fuel. One of the displayed Auto Expo, it can take up ethanol mixing up to 85%. And we have strong hybrid and hybrid, which gives you the 40, 50, 60% of the time it works on a city on a EV mode. It charges, regenerates. It's a regenerative braking charging, so you have no anxiety about charging infrastructure. So I guess all these technologies will coexist, and EVs will also be one of them. EVs, of course, is, as I said, 17 to 20%. But going forward, I think there will be an inflection point where you could see a much larger adoption of EVs.
Very important point, sir. Last question to you. The budget is around the corner. What do you think should come in the budget for the auto sector? I know the government has done a lot of schemes like FAME and, of course, PLI schemes for various auto parts. So keeping EV in mind and keeping ICE vehicles in mind, do you have any suggestion for the upcoming budget?
Listen, for the industry, auto industry in particular, what we have found is there is an extremely high correlation with the overall economic growth. So if there is an overall economic growth, you see it very highly correlated with the automobile growth as well. So as long as the budget is oriented towards growth, I think it's going to be good for automobiles. On any specific ideas, of course, such technologies as CNG or hybrid, those will be obviously very welcome.
All right, we did hear the management of Maruti Suzuki talking on the sidelines of the Auto Expo. Mr. Basu Malik, your thoughts on the entire auto basket and how does Maruti as a stock really look to you? Going forward from here, does it make sense for investors to really look at the auto space and Maruti as a stock as a potential buy for 2023?
So first of all, I am personally very bullish on the auto sector, not bullish on Maruti, because I think they've completely missed, or they are continuously missing the bus on it. And the fact is that it's good to talk about CNG and the other varieties, but the problem is that the world is moving towards EV, and Maruti has nothing to show for it. Right? If you ask the same question to somebody in Tata Motors, they will say that the future is completely electric. Now, if you look at the numbers, just in between 2021 to 2022, the market share of electric vehicles in India has gone up 5%. So petrol and diesel has come down, I think, if I remember correctly, from 95% to now 90%. So that difference of 5% has changed in 1 year, although it is primarily two-wheelers and three-wheelers, because that's what is driving the EV adoption because of the bracket, etc. And that's how the curve is obviously going to be. It's going to be, the adoption is going to be first in two-wheelers, three-wheelers, then it will go to personal vehicles, etc. But the point is very simple. Is ultimately the world is going electric, and any company which does not have a serious electric portfolio is going to face headwinds today or tomorrow, no matter what their marketing or what their management team says.
All right. Well, on that note, thank you so much, Mr. Basu Malik, for being with us on the show and sharing all your viewpoints and insights on the various pockets of stock markets and different stocks that we've discussed on the show as well. And let's look at quickly how the markets are looking at before we wind down the show. 175 points down, 59,930 right now for the Sensex. It's about 0.3% of a cut that you can see. About 50 points of a loss for the Nifty 50, 17,850 or thereabouts is where the Nifty is also hovering near. Third consecutive day of continuous losses on the D Street, but will we see a bounce back? How soon will we see that? And where are the buying where is the buying really going to come in from? And what side of the market are you going to be in to be on the profitable side? All of those discussions will continue, so do stay tuned on to Business Today TV. Don't forget to subscribe to this YouTube channel and with us via our other social media platforms, Facebook, Twitter, Instagram. Many thanks for tuning in.
Men and women who built Indian industry, and the young guns who are shaping tomorrow's India. From storied careers to unicorn dreams.
The equity